Good morning, everyone. Today I'm going to go over a small trade we just took for SPY, which was puts at pre-market low, this 434.47 level, which profited nearly 25% in just a few minutes. This was a quick trade where we were able to kind of ride the trend a little lower and make our profits off of that. Now I'm going to go ahead and go over this trade and the reason we entered, as well as the information and background behind it. All right. First off, it's important to note that this is the pre-market low. Not only that, this is actually a daily level as well. We have a few buyers down here, some basic price action up there, but overall, the key in this price is the reject right up here on Tuesday, July 21st, and a few buy candles right at that price action, which follow through, and we get to see a little bit more of that as we go on. Overall, big candle today, big candle for buys previously. This also candle shows good areas for buyers, and we were able to just have an idea that there was buyers down there. Now, personally, the reason we took puts was to follow the trend. We ended up breaking it, coming back, and using that breakout as a resistance twice, which ultimately led to that sell-off, which is why we really held on to the trade rather than seeing this first pump up and then we didn't sell out of fear. We ended up holding, being patient, seeing how it worked out, and with the information that followed, we were able to continue holding and scalp it down to 434. With this, we were able to take profits and hold a few runners to see if it would get lower. It did not. We ended up breaking even right at this resistance at 434.47. But other than that, the trade was pretty solid in terms of following the trend, being patient, and working out. Now there were a lot of risk factors in this trade, and we will go over them. Risk factor number one being that the first initial breakout wasn't a full body candle down, right? We entered it pretty quick following the trend. We're trying to see if we can get a quick move down. Instead, it actually seen some buyers. Now, why did we hold when this happened? This went right back up to 435.69 where we saw a reject, but overall the risk factor could have been buyers starting to enter down here. That could have been a large possibility, but in the contracts we were barely down at that price. We left room to see what would happen up to VWAP, but overall there was that risk factor. Now what caused us to hold again was that break below, full break, and starting to use that 434.47 as a resistance. The more we saw that occur, which it occurred twice, the more we were confident in holding, and then we ended up selling back down. Now we did size light for this trade due to the risks involved, but it worked out in our favor. That is all for today's pre-market analysis and how we used it to identify where to enter puts at, or where to or what to use as a key level, because pre-market data is considered a key level. In fact, if you look at after we exited, we ended up using that same level as a support where we now see a massive pump. So definitely always try to have some sort of pre-market data known, so that you use it in your trading day. Now, if we end up going lower, then we're going to see for a position inputs again. Well, that is all for me today. I hope y'all have a great rest of your trading day, and I'll see y'all. Peace out.